Hello, friends. Do you want to elevate your cannabis brand or product? Let's get real. Standing out in the cannabis industry isn't a walk in the park. That's where Green Lane Communication comes in. They're not just a cannabis-focused PR firm. They're your partners in getting genuine, valuable coverage, from features in major publications to shoutouts in niche blogs and podcasts. Hey, like this one, Cannabinoid Connect. But Green Lane Communication isn't just about making headlines. They're about building your narrative, crafting messages that speak directly to your audience, and creating robust media strategies that hit the mark. Whether you're just starting out or you're a seasoned player in the cannabis game, they've got the chops to amplify your presence. As we gear up for conference season and head into Q4, there's no better time to boost your brand's trust and credibility. Ready to make waves in the cannabis world? Reach out to Green Lane Communication. Check out their offerings at greenlanecommunication.com or find the link right in our episode description. Let's elevate your cannabis journey together with Green Lane Communication.
3, 2, 1, liftoff.
Cannabinoid Connect, the nation's most diverse cannabis-related podcast.
Roll with it. We are recording. Ben Burstein. Am I saying that right? I was always wondering if okay.
No, you got it.
Nice. Well, Ben, welcome back. As I was saying before we started recording, I got a lot of good feedback from your initial appearance on Cannabinoid Connect. We talked about market maturity cycle and evolution of the cannabis business models, and you really kind of dove in state by state for what's going on. And, we have a plethora to talk about today in terms of navigating market trends, policy shifts at the federal level, M&A action. So before we dive into the nitty gritty, Ben, let's first start on kind of a light note, man. I mean, I'd like to have you on regularly now. So, allowing the audience to get to know who you are, anything kind of going on in your life right now, exciting that's happening, milestones, or just kind of, business as usual.
Oh, thanks, Kevin. I really appreciate it. Look, thanks so much for having me back on. I just have to say, thank you so much for everything you do for our industry. Like, you lead some of the most interesting conversations in cannabis, and I know that ours is going to be one too. So I've just really been looking forward to this for a long time, and I know we're going to have a lot of fun. Things have been interesting at LeafLink. We finished raising our Series D in the summer. We were able to upsize our round. And look, the industry's experienced a lot of pain. It's been a really tough time for a lot of our customers, but LeafLink as a whole remains committed to our prime objective of just making the commerce experience easier for operators across the supply chain. Most of my work has been spent on our M&A and strategic partnerships front. So I've really just been diving into the ecosystem and thinking about what products really matter the most to our customers and what makes the biggest difference to their bottom lines. So I think cannabis is a really interesting industry where you just have a lot of inefficiencies that exist across the tech stack. So working at a place where we're really striving to solve those issues and find an integrated solution that makes a lot of sense for the industry has been a lot of fun. So it's been a really busy summer. There's been some nice personal travel. I went with my girlfriend to Italy, which was like my first big trip. So that was a lot of fun. But no, it's just been business as usual in cannabis, continuing to live and breathe the industry. And things have been tough, but it definitely seems like some green shoots are starting to emerge. So as we'll talk about today, there's a lot of pockets of positivity for us to start feeling pretty good about.
Yeah, no, absolutely. I appreciate you bringing up what LeafLink is focused on and really, it's bread and butter, right? And I want to close with that at the end, is really talking about LeafLink's vision in more detail. And that $330 million raise, I think is what you said. Or so we can talk
100 million this round, but 300 plus in our total funding.
Got you. Yeah. So we'll definitely dive into that too. Where did you go in Italy? Just curious.
We went to Rome, Florence, the Cinque Terre out on the coast, Portofino, and Milan. I've never really traveled much in my life, so to have gone and done such a big trip was really cool. Very different. Italy's very interesting. They have a large medical market, all growing and productions done by the military, actually. So
really?
they've grown the industry to, I think, over 50 million of sales over the last 12 months. They're starting to export to Germany, Spain, Portugal, some of the other European countries. So it'll be interesting, but yeah, Italy was fun for vacation. And as you look at international cannabis markets, it's definitely one that's up and coming.
That's so cool. You got the best of both worlds. You got to vacation and kind of nerd out on the medical cannabis side. That's awesome, man. And Rome is awesome. That's I've been there, and it's a beautiful place. If those listening haven't been, so let's jump into it, Ben. First, I want to talk about nationwide cannabis market analysis. Right? Maybe let's start at the macro view. Paint a broad picture for us. Current cannabis market landscape in the U.S. What are some pricing demand trends? Are they evolving? What are you seeing?
Yeah, so US retail sales this year are tracking to around $30 billion. That's going to be up 15% from last year at $26 billion. That's a really big accomplishment and positive sign for our industry. 22 was down year over year versus 21 total retail sales. So that return to growth is really a big win. When we think about where that growth is coming from, it's actually pretty concentrated. 4 states, Missouri, Maryland, Michigan, and Florida, are going to account for more than 2/3 of all growth in cannabis this year. Missouri, they launched their legal sales in February. That's a market that went from around $45 million a month of medical sales to today doing over $120 million a month. Then you have Maryland, which just legalized at the beginning of July. That's a market that went from $40 million a month to over $90 million a month so far. Then you have states like Michigan, where the legalization of recreational stores in Detroit added a lot of incremental sales. You have a lot of new stores throughout the state, and then some restraints on capacity on the supply side. So you just had better pricing that's led to better sales. And Florida continues to be a really strong state for growth as the MSOs continue to execute their strategy in the state with 100% internalization and full vertical sales. The margins are a lot better than a lot of other markets look. So as a lot of the largest companies in our space look to improve their margins and financial picture, it's just going to increasingly concentrate in some of the healthier states like Florida. So those are your 4 big states. They all together have contributed over $2.5 billion of the growth that we're going to see this year. The remainder of the growth is going to come from some of your newer legal states that have come on over the last 12 to 18 months, like a New Jersey, a New York, Connecticut, Vermont, New Mexico, some of the others. Look, a lot of the capital constraints have impacted these new legal markets very intensely, where the focus of regulators was to empower as many equity applicants as possible. When it's been difficult to fundraise, it's been difficult to open those licenses, and it's translated into lower than expected sales. So I think that those states like New Jersey and New York, Connecticut, are really going to be the bulk of growth as we look forward over the next couple of years. It's just going to take some time for those markets to really get going. Outside of those 10 states we just talked about, pretty much all markets are flat to down versus last year. And that's for a lot of different reasons. We're talking at a really interesting time. Like, we're right at the end of the harvest. And this year's harvest trends have been really interesting. We spend a lot of time thinking about it here at LeafLink. This year's harvest is going to be smaller than last year's. It's for a few reasons. Market struggles and price compression dynamics have made it really difficult to operate as a cultivator in the space. There's been significant profitability challenges. 70 to 80% of operators in the industry are unprofitable today. It's really difficult to plant a large cultivation facility, whether indoors or outdoors, when you don't have the working capital or profits or cash to really support it. And then lastly, it's just that limited capital availability. Like, the industry had a lot of funding come in 2020, 2021. That really juiced the amount of supply that we saw last year, which led to a lot of the negative price action that we've talked about. That's starting to right size, which is definitely a positive. And we can walk through a few states where those impacts are really being seen, right? Like, the one I always like to think about is Oregon. The state does an amazing job of reporting out like their harvest numbers, all sourced from metric. And look, you had a harvest in 21 where across July, August, and September, Oregon harvested more than 7.5 million wet weight pounds. You come 2 years later, and Oregon this year is going to do 4.1 million pounds of wet weight. Like, that's total capacity being cut in half over 2 years. No one expected that to come. California, there's been a significant increase in the amount of licenses that are going unrenewed. So when you think about available active licenses, during the harvest last year versus the harvest today, there's about 20% less square feet available for total legal capacity. So that's a market that was operating at like 70, 80 million square feet of available capacity, now down to like 60 to 65. So that's been a pretty big impact. And we've seen that in the pricing numbers. In a state like Michigan, that's LeafLink's by far largest market. Active plants in the ground are actually down year over year, despite cultivation licenses increasing more than 50%. That's on significantly more retail stores. So that's an improvement to the S&D. And we know we love to talk about New Mexico, right? Your homeland. Like in New Mexico, the amount of plants in the ground versus the amount of total stores at last harvest was around 1,000 plants per store. That was slightly oversupplied and it led to some negative price action. Today, you have more than 1,000 active retail licenses, and that's brought your plants in the ground today to around 600 per store. So when we think about the right sizing of supply and demand across the industry, there's definitely positive trends there. And I think we're in the early days of seeing improvements to pricing and operational efficiency and some of the upstream struggles that we've seen. But we've never, ever in the history of cannabis in this country seen such significant decreases in the amount of capacity. So pricing is still likely to be challenged going forward over the next few months, right? Like cannabis is a really seasonal product where 70 to 80% of total production across the country happens in like a 2-month span in August and September. Then it takes about a month to harvest, cure, process, and brand all of that raw flower into the products that we know and love. And then those products hit shelves at the end of October and collapse prices. So when we think about price action in the country, total nationally aggregated prices on LeafLink's site have gone up by about 20% since January.
Wow.
As we've seen every year, those prices are probably going to go down as product starts to hit shelves. So look, prices are going to go down from right around now through the beginning of next year, and then you have like the 420 holiday really wipe out the remainder of the product left stored up from the harvest. But overall, the main headline is that things are improving, and while they might not necessarily be fixed tomorrow, we're setting up the market for a place 4 or 5 years down the line where you have significant profitability. Operators are running their businesses more smoothly, and they're able to do it in a cost-effective way. So things are good. I think there's been improvements over the last bunch of months, but again, there's just a lot more pain to continue going through in this industry where there's going to be more businesses that go out. And price compression has been one of the big drivers of that over the last couple of years.
Good. I mean, overall, it sounds positive. Like you said, we're moving in the right direction, despite, the certain market dynamics that you're saying that are impacting certain things like pricing. I mean, on the other flip side, there is momentum and movement happening on the federal policy landscape side, right? So we heard HHS's recent recommendation of moving cannabis from Schedule 1 to Schedule 3. The Senate committee voted on the SAFER Act. So now it's going to be taken to both chambers for a vote to move into law. There's a lot going on, right? And I think even the Farm Bill reauthorization, which I'd love to learn more about from you. So talk to me a little bit about each of these types of catalysts, if you will, and how they're really helping shape the future of the cannabis industry.
Yeah, thanks, Kevin. Look, at a really high level, this has been the most federal movement that we've seen on a policy front probably since the Cole memo back in August 2013. So this is 10 years in the making to come to a true watershed moment at the federal level. Let's start with Schedule 3 recommendations. The Health and Human Services Secretary Becerra recommended, based on their research with the DEA, that they were, or with the DEA, they were interested in really figuring out, like, how do we think about cannabis from a federal level? How do we think about it from a federal regulatory level? And what is it going to look like in a future regulatory state? There's a lot that we don't know today. There's a few things we do know. So I would say the largest positive that the industry continues to talk about from a potential Schedule 3 recommendation is the elimination of 280E taxes. If you move cannabis from Schedule 1 to Schedule 3, you get a lot of those tax benefits back. So when we think about an operator today, about 50% of their total revenue is comprised of the cost of those goods that they buy to sell in their stores. That other 50%, you can't deduct anything from your taxes. So you're taxed at a rate that's 3 to 4x the remainder of this country. And it makes it really hard for a lot of companies to really succeed. What it ends up leading to is a huge drain on cash. 280E taxes are going to take an estimated $500 million of cash away from the MSOs this year, another $500 million from the rest of the industry. So that's a $1 billion total impact on cash available in cannabis today because of 280E taxes. If we think about a future where you have Schedule 3 and you don't have those 280E taxes, that freed up cash to a lot of the companies in our space provides a lot of benefits. One, it improves profitability. Two, it makes it so they can spend more on CapEx and really like reinitiate some of those growth cycles. And three, it allows them to return cash back to their shareholders. The federal government's probably not going to give that much money back to the industry. I think there would be some kind of excise tax placed or some type of change to the taxation structure, but any of that's going to take an act of Congress, so that's further down the line. When we think about some of the other impacts, right, there's a big acceleration to research. If you have the FDA, the DEA, and the HHS on board, there's just significantly more resourcing and availability of funds to go to research in cannabis. That's been a big problem historically. You've had 6 companies that have been able to research cannabis. The only one that actively has done is the University of Mississippi. So when you bring a lot more attention on the research side, it's just going to bring a lot more innovation and benefits to the product as a whole. And lastly, I'd say from a capital market sentiment, there's been a big benefit from Schedule 3 at the federal level. Like you've seen a big surge in equity prices. You've seen a big decrease in credit spreads in the industry. Like MSO paper being publicly traded is down like 200 to 300 bips in cost. That's a pretty significant change. It means that investors are just more comfortable with what the industry looks like. And I don't blame them. If you're an investor and you see a federal policy mechanism that's really moving towards liberalization and progressing to like a more legal industry, that's going to make you feel more comfortable with the companies today. So I think Schedule 3 is a really positive step forward for the industry. We don't know exactly how it would be implemented. The biggest question is what the future regulatory framework would be. If you move to Schedule 3, the FDA would likely be the one to regulate the industry. That's probably not possible. Like the FDA simply doesn't have the resources to regulate the entirety of the industry across the country. So you probably maintain this like state by state regulatory structure, which I think makes a lot of sense. We just don't know what the federal government's approach is going to be. And the last thing on timing, like the HHS initiated their first timeline to take another like 6 months versus where it ended up doing. So we really came out as a surprise with the Schedule 3 recommendation when the federal government did. The next step in the line is going to be for the DEA to really complete their end of the research. That's going to take at least another year. So most of the people I've talked to on Capitol Hill estimate like a Schedule 3 true recommendation coming around election time. We don't know if it's going to be before or after, but I really wouldn't expect anything sooner. So that's it for Schedule 3.
What's the criteria? Sorry to interrupt. What's the criteria for the DEA's research? Like, what are they? Seems like a weird organizational body to carry out research for cannabis when they've been enforcing and lawfully putting people in prison for it, right? Like, what does this research entail?
Yeah, you're right. So when we think about the rescheduling process for any drug that's Schedule 1 to 4 or 5, it always starts with an Attorney General recommendation, which we got from Garland last year. Then it moves to the Health and Human Services, where with partnership with the FDA and DEA, they do their initial research. That's been done and given the Schedule 3 recommendation by Becerra. Then you have the DEA's true research, and the DEA, under the Attorney General's direction, really reviews the HHS recommendation and conducts its own scientific and medical evaluation. So what that means is there's going to be open hearings where people like you and me are invited to come speak, talk about what cannabis looks like from a research side, what it looks like from a medical perspective, what the impacts of recreational markets are, basically everything under the sun. There's then a public comment period for us to submit all of our comments outside of a hearing nature. And then the DEA comes to its recommendation. in the history of rescheduling, almost every single time the DEA has followed the HHS's recommendation. I couldn't find a single example. I just don't want to say it for certain because I'm not sure. But in every example I've found, like the DEA followed the HHS recommendation. So I think it's extremely likely that the DEA is going to agree with that Schedule 3 recommendation. We just don't know yet. And then lastly, the last step after the DEA goes through its process is really like that rulemaking, timing, and final recommendations, where the FDA will then be responsible in like a joint effort with the HHS to really come down with what our federal recommendations are going to be from a rulemaking perspective. And then some of that can be taken up by Congress. It's just a really drawn out, extended process that for many other drugs has taken 5 to 10 years. So when I think about like true rescheduling, I think it's probably more likely to happen in the back half of the decade than the front half. So clearly that means like multiple years until you see true huge federal progress. But look, at this point, we don't know. So the Schedule 3 recommendation, I think, is the biggest federal policy action over the last couple months. Next, we can dive into SAFER. So the Safe Banking Act was reintroduced in the Senate as the Safer Banking Act. Maybe we'll see a Safest Banking Act. But when you think about the new Safer Act, really it's just a slimmed down version of what has been proposed historically. So it was supposed to be a more bipartisan effort. You got it out of committee a couple days ago. So that was a really positive change, the fastest progress we've seen in the Senate. We're at a really interesting time where the federal government's about to shut down this
That's
weekend.
what I was saying, man. It's like, it's positive, but what? I mean, they have to come to an agreement. Is it tomorrow? Because we're recording on the 29th. So yeah, tomorrow, or we go in shutdown.
Yeah, most likely. And there's not much you can do if you're a federal legislator at this point. It's really challenging because I feel like there's this really positive bipartisan energy around cannabis. That's what we've been hearing on Capitol Hill. Like, really, it's stronger than historically. I've always been one to be pretty bearish on federal action. And I actually felt pretty confident and positive with what we were hearing from the Hill this time. And then you have the big government shutdown coming down.
Can't get a break, right? It kind of feels like that. Like one win, and then a setback. One win, and then a setback. It's like, we're getting there, but the resilience of the industry will always continue to fight through. So that's one thing that you don't have to be worried about. These people are resilient. They're strong. Yeah,
so we'll see. At LeafLink, we've been really pushing ways to make the industry safer for the participants in it. And safer, safest is one of the great ways of doing it. We think that Schedule 3 rescheduling is another great way to bring some more legitimacy and just much needed professionalism to some of the services in the industry. But we'll see. Lastly, I would say from a federal perspective, what we're really following is the Farm Bill reauthorization. So the Farm Bill back in 2018 authorized the production of hemp and removed it as a controlled substance. In that Farm Bill, hemp was defined as containing less than 0.3% of Delta-9 THC. As we know very well, what's happened over the years is that definition was probably not stringent enough to really prevent a lot of the THC analogs that we've seen developed. I don't blame the federal government or regulators. Like, I see a lot of people complain about the Farm Bill. The technology to extract Delta-8 and Delta-10 THC did not exist in 2018. Like, there was no way to get THC in the concentrations that you can get in a Delta-8 product today from hemp. So at that time, regulators just simply didn't know that this was a threat coming out. Now we're in a place where clearly, like, the wide sweeping spread of Delta-8, Delta-10, and other THC derivative products that are largely, yeah, exactly. They're unregulated. They do not go through legal cannabis markets. They're essentially in a loophole. You have a lot of states banning them. You have some states putting them as part of the legal cannabis program. And you have some states like allowing hemp-derived THC to be the main format of the market, like Minnesota. It'll be interesting to see how Congress addresses this hemp definition in the new Farm Bill reauthorization. That's likely coming at the end of this year. It happens every 5 years. So I think there's going to be a change in the definition because federal legislators are definitely not happy with the way that like the Delta-8, Delta-10, other hemp-derived THC derivatives have become such a big part of our industry today. Like Delta 8 products have done more than $2 billion in sales. Like that's most than
Whoa.
what like 5 states have done in total cannabis sales. So
Right.
it's definitely a big market and something to watch. So from a federal perspective, you're definitely getting a lot of attention to cannabis. There's going to continue to be changes at a federal level, but like the three big catalysts are going to be Schedule 3, whatever happens with safe banking and the Farm Bill reauthorization.
Yeah. I mean, and with the Farm Bill reauthorization, like outside of the synthetic cannabinoids that you talked about, are there any other factors that would influence the hemp and CBD market?
Yeah, I think the big question is what regulation more generally is going to look like. Like what restrictions are going to be placed on age purchases, labeling and production standards, timing. Like it just there's a lot of uncertainty about the hemp market. It's largely unregulated today. And there's just simply not like the type of compliance requirements that you have in other intoxicating substances like alcohol, tobacco, various pharmas. Like these are extremely controlled substances that even if it doesn't look like it is to you as a consumer are tracked very intensely at the federal level. That's just not happening with a lot of like the hemp derived THC products today. So I think there's going to be a lot more safety and regulation that comes around them more generally. I don't think the federal government's going to ban them. That's definitely not been the discussion that I've heard from Capitol Hill so far. But a lot of attention is going to be played into how do we better regulate hemp products and how do we better legitimize them? Because today they're definitely living in a bit of that gray area.
Yeah. And I mean, the lack of regulation in the hemp market is really originates from, the FDA not recognizing hemp derived products as dietary supplements. Right. So like,
Yeah.
it's kind of a catch-22. Like it's in the government's hands to kind of, label it as so or categorize it as so then they could regulate, because right now it's the wild west. And so I think part of those discussions, right, is the FDA stepping in, but then I think the FDA has kind of passed the ball and said no, this is up to Congress to kind of tackle, right? So they're kind of playing football in a way. But it's interesting, and we'll see how what comes of it, what transpires, because there is action taking place. Let's switch gears, Ben, and now talk about M&A action in cannabis. So I guess we'll kind of separate this topic into two different categories. The first would be plant touching businesses and then ancillary businesses. So tell me what trends you're seeing in terms of M&A among plant touching businesses, and then what are some notable deals that caught your eye?
No, thanks, Kevin. I appreciate you asking. This is all I do all day, so I love talking about it. On the plant touching level, total capital provided to the industry has fallen substantially over the last couple of years. Your large operators raised over $6 billion back in 21. That fell to around $2 billion last year. And this year, we're on pace for under $1 billion in total. So there's just not a lot of money coming into the industry. That's also been exacerbated by a huge decrease in M&A activity that's happening for a few reasons. First, low equity pricing. Company stocks are not worth that much. That's how they bought a lot of the other companies historically in the industry. Without cash and without high equity values, it's very difficult to acquire anyone, which is why a lot of M&A activity has been down. Second, a lot of the large MSOs who have the strongest or largest balance sheets are starting to hit their license caps in some of the stronger states where a lot of M&A activity has been done. Like the most intense M&A activity on the plant touching side this year has been in Maryland, where all the big multi-state operators are trying to bring themselves like to the 4 dispensary, 1 processor, 1 cultivation asset limit. It's a similar dynamic to a state like Ohio, where you're allowed 5 dispensaries and then 1 grower processor license. So those states have seen a lot of MSO activity. At the same time, like where a lot of M&A activity historically has been is in states like Illinois, where all the companies want to get to their 10 dispensary limit, or in a place like Florida, where every company wanted to get that footprint. A lot of that M&A has been played out. So as we look to like the development of the industry, there's just not a lot of benefits to scaling across multiple markets. Like you essentially have to set up operations separately in each one of your states. And sure, there's like a couple percentage points of OpEx that you save from having a national organization. but just very expensive to run cannabis companies across many states. So because of those two reasons, you've just seen a big decline in like total M&A activity in the plant touching space. I think you're going to see some more M&A starting to return to the industry, and we've already been seeing that. The main reason is that a lot of companies are like at the end of their cycles. Either too much of their production is indoor in really expensive places with really difficult operating conditions as price compression comes. So in states like Massachusetts, some of your older, like more focused MSO markets, like in Illinois, for example, you're seeing a lot of M&A activity. In some of your legacy markets, like California, Oregon, Washington, like that story has been played out over time, but re-accelerating today. And what's happening is your large companies that have strong enough balance sheets to really support the debt that a lot of these smaller companies have been loaded in with are essentially getting these companies for free. So if you're a large multi-state operator and you are targeting like a dispensary asset in a state today that's performing okay, like a Massachusetts, where pricing is down the most of any state over the last year, that company probably has a lot of debt on it, not a lot of equity. So if you're the big MSO, you can actually acquire those debts for free. So there's no equity value, and the equity value is wiped out. And if anything, what's happening is that that larger company, when it consolidates those debts and those assets and like the infrastructure that's tied to it, are able to renegotiate a lot of their leases. So it actually leads to M&A being done at negative values. So you have large companies today essentially being paid to acquire other plant touching businesses. That's never happened in this industry.
Wild. Yeah.
It's very interesting. That's probably going to continue. There's just more pain that's coming for this industry, and as prices continue falling over the next 6 months, some of the improvements in equity valuations that you've seen from like the Schedule 3 announcement and some positive like second quarter earnings are going to translate into some more M&A activity. Like I've said, you've already seen it pretty aggressively in Maryland, where most of your big MSOs that don't have a footprint are buying in aggressively. Like some of the companies I think of that have done a spectacular job of it, Jason Wild and Terracin, they've completed out their footprint. They bought a larger capacity on the grow side. They expanded their dispensary count. You have a company like Ascend Wellness that came in and bought 4 stores and that grower processor license to enact like a new state. When you have a lot of companies looking for growth, you want to make your footprint more concentrated into those growth states. So I think that's where like a lot of the M&A has happened on the plant touching side. Going forward, again, like there's going to be a lot of deals that are priced at zero or negative equity. The large MSOs are there with the balance sheets to do those deals. It's just going to take time, but they're coming. And we've definitely been hearing them in some of our discussions. That's the plant touching side. If we talk about the tech side, I think that's also really interesting, right? Like among your ancillary companies in cannabis, and LeafLink is a tech solution, so I think about it a lot as like your Cannabis Tech ecosystem. You're at the convergence of two pretty bearish trends over the last couple of years. Like you've had huge decreases to your tech multiples. So as a tech company, you're valued less today than you were a few years ago, like from multiples perspective. And at the same time, you're highly exposed to the cannabis industry that has definitely experienced some challenges, lower willingness to pay from operators, just like an inability to move a lot of money around to your ancillary providers. So I think your Cannabis Tech companies are dealing with some of the same issues that are also present like on the plant touching side. So capital availability is really limited. Like total Cannabis Tech funding was almost $1 billion in 21. You had around $900 million provided to the tech space. In 22, that was $250 million. 23 is pacing to be roughly flat. And most of that's because of LeafLink's large raise earlier in the year. Second, consolidation is accelerating really aggressively. You have a lot of products in the cannabis industry that haven't really scaled into platforms or larger companies. Like you just have a product feature that was specifically released for cannabis, has scaled into a couple hundred stores or a few dozen sellers or a couple million in sales. And then it's very difficult to continue growing that piece of the pie just because of a lot of those challenges at the operator level. So when you have a really good product, but don't have the capital to truly scale it or the platform and distribution channels, you want to consolidate and you want to tie in with a larger platform. So year to date this year, through the first 9 months, you've had 25 plus deals announced in Cannabis Tech. You had 8 in all of 22. So you're clearly seeing this like huge acceleration in the amount of consolidation. My job at LeafLink is to source and diligence opportunities. And look, like I've probably underwritten about half of the Cannabis Tech ecosystem more broadly. And again, it's just really difficult to run a business that relies on expanding the willingness to pay of operators that are experiencing the most pain they ever have. Like no matter what solution you're running, it's just difficult to make money when your customers aren't doing a really good job. So like if you think about the top 20 companies in Cannabis Tech, 19 by revenue or any other metric, like 19 of them are all working at the retailer level. Like that's just where a lot more money is. Retailers have generally been more healthy than their upstream licenses. So I think that's where a lot of the activity has been. The only company that is very supplier focused, drives almost all of our money from our upstream customers, and has been able to like thrive during this time is LeafLink. Like we just continue to really push on how do we help our operators best run their businesses in the most efficient and cost effective way as possible. And I think that's like let us do a really good job of remaining a platform that's really essential to the industry. And at the same time is like allowed us to survive and get ready to thrive with a lot of our customers. So overall in Cannabis Tech, like companies are looking to integrate the stack. Everyone wants to go fully vertical. All of the products are trying to tie in with like a different piece of the ecosystem or a complementary product in the platform. And we're seeing it very much on our side. It's just, again, a lot of these companies have shrunk their revenue over the last year, not grown it. So it's difficult to find pieces of the industry that are really exciting. But I think through all of our work, we've found them. There's definitely assets that exist in the ancillary space that are growing faster than ever and doing better than ever. So I think you'll see some announcements coming from us over the next few months on that. So more to be discussed. But again, it's just people are looking to survive the downturn today. And it's tough both at the plant touching and ancillary levels.
Yeah. Follow-up question to, and it's related to the Cannabis Tech discussion, and that is the emergence of AI within the cannabis industry. So, what are you seeing in terms of adoption rates and usability of artificial intelligence?
That's a great question because I've been thinking about it a lot. So far in practice, most of it has been done at like the B2C level, where if you walk into a dispensary, you can tell like an AI bot, hey, this is what I'm interested in a product. And their bot, essentially, as well as your typical bud tender, will be able to refer you product. And then that can be infused with like marketing ads and various other products. Where I think AI is really interesting is one of the biggest problems in cannabis tech, very generally, is data is non-standardized. So data doesn't talk to each other from different systems. So a company like LeafLink, we process almost all data from the very inception of plants to when that product is sold to a retailer. Then that data gets passed off to like your point of sale systems, B2C e-com platforms, ERPs, etc. Those platforms' data is very difficult to translate back up the stream. So if you're a company that's really trying to have an understanding of what your products look like at scale across your supply chain, today there's not really a good way of understanding that. Here's where AI comes in. I think AI can really be a tool to improve the reconciliation of data across data sets in the industry and make it so that data piping can fly a lot better. Like most of it's manually done today by some of the cannabis tech companies that have like focused and prioritized like big product catalogs or big data cleansing efforts or like custom dev for some of the companies in the space. It's difficult, tedious, and very expensive work. I think something like AI is going to help a lot on the data side and really make it possible for like data to flow through across this industry because like the impacts of the lack of data are huge, right? Like
right.
We can give an example.
Not data driven for sure, right? I mean, it's not the industry's fault. It's just like you said, these hurdles and these challenges when it comes to the tech stack. Go ahead. Yeah.
So no, we're thinking a lot about it here at LeafLink, and like we're just addressing it with different types of products. Like One of them is inventory management. Today, it's very difficult to even know what you have in inventory in your store, when things are expiring, what products are selling through the best. Most times, the way you restock a store is the bud tender walks around, sees what products are missing from the shelves, and then they're ordered on LeafLink. And we think that's one way of doing it, probably not the best way of doing it. Like, we want to really bring in those data insights so that if you're a purchasing manager or a bud tender at a store, like, you don't have to guess what to buy. You know exactly what to buy, what's going to sell through the best, and what's going to tie up the least amount of your working capital. And that's been like a big priority for us here. So if we think about the development of data in the industry, I think AI can really be a tool to help cleanse all of that. You haven't really seen it at the beginning. We've discussed it at LeafLink. We'll see as it gets productized over time. But yeah, I think on the B2B side is where you're going to get a lot of benefits there.
Yeah. Well, and speaking of the B2B side, I think this is a good segue to kind of wrap up our very informative discussion today. And that's LeafLink's 2023 market expansions. I mean, you touched on them earlier at the beginning of the podcast, Missouri and Maryland, as well as New York and Connecticut, and just how, so tell me a little bit about what y'all are anticipating, some strategies that are in place as you navigate these new markets. And then I have some other questions in terms of, the company's overall vision to innovate in the wholesale space.
Thanks, Kevin. Look, LeafLink is the wholesale platform of cannabis. We help 3,000 plus brands sell product to 8,000 stores. More than half of all products sold at dispensaries were originally sourced from our website. So we do a really good job of helping our operators across the supply chain better improve their businesses. At LeafLink, we focused a lot on the states that are growing today. Like, if you think about LeafLink's history, back when the company had started in 2016 and 2017, most of the focus was on your legacy markets like Colorado, California, Washington, Oregon. All those states remain really important and like with a really large footprint. But then over time, as the industry continued developing in like 2019, 2020, 2021, LeafLink's footprint really shifted to some of your newer states like Illinois, Michigan, Missouri, Ohio. And these are states that we remain really heavily invested in today. Like in Missouri, all 10 of the biggest brands sell their product on our platform. Every single store buys their product on their platform. In Maryland, we're helping some of the largest brands sell into all of your new stores that are accessible to the retail market. And these things have been really positive for us. As we look to like the growth of the future of our company and like the future states that really matter, like we're headquartered in New York. We really care about the development of the New York market. We've done a lot on the seller side to really improve some of the pain and struggles that cultivators and processors have faced. I mean, New York's been challenging, right? You have 350 cultivators trying to sell into today 24 stores. And it's not just one harvest they're selling, it's two, because you had last harvest, none of that has been sold through. And then you have the other harvest that just came in the last couple of months. So it's just a struggle in a state like in New York. But as you look to the future of the industry, like regulators just announced this week, they're going to issue over 1,500 licenses over the next year. And like with some of the litigation and other like constraints on growth that you've seen for 6 months, like maybe you'll see some of that going forward, but it's not going to last forever. So we're really excited to be there for like the true opening up of the New York market. And it's a state that we think is going to be one of the strongest in the country in 5 years. So we want to help it do it and like be the platform to help all product move both digitally and physically.
Mm-hmm. Well, and with the $100 million capital raise that y'all just got, as well as continuous expansion that you've talked about, what is the long-term envision trajectory, and where do you really see yourselves owning what area within the cannabis space?
Our goal and the underlying mission of every single piece of strategy or action we take at our company is to make the wholesale process as efficient as possible. Like, our job is to make it so that our operators can transact in the easiest way possible, right? So what LeafLink does today is they have a marketplace where a little more than 50% of all goods across the industry are transacted each year. We then monetize that transaction of services through other products that we think really help our operators run their business. So whether it's like factoring tools, our B2B ACH rail, advertisements, we have logistics partners across almost our entire footprint. So if you're a brand and you need something transported to a new store, or you want someone to take on your self-distribution needs today, you can do that through LeafLink. And then we have other products like retail-focused solutions, financial services, really important parts of the business that we think about the growth going forward. When we think about what we plan to do with the money raised, I think there's a few different things to consider. First, like we're going to continue investing in our platform and investing in our customers. We want to make it so that our customers can save as much money as possible while also enabling as much revenue growth as possible. And we think we can do that by just improving the product and really enhancing that matching and discoverability effect on the marketplace. So we're investing a lot of resourcing there. We're looking to unveil new, really interesting products. Like as you'll see in announcements coming out, like we continue to focus on inventory management tooling, expanded financial services, like really pain points in the industry that have just been really inefficient, expensive, and integrated into the LeafLink platform is just going to make the entire experience better. And then lastly, really on the M&A side, we continue to look to how do we bring the best products to our customers and make an integrated solution that makes a lot of sense. So making our platform the source of truth and like really making sure that you know all of your data is accurate that comes through our platform, like that's a really big priority. Thinking about how do we like best manage our customer base and make it so that our customers can get us manage theirs is really important to us. So we're looking at expanding our capabilities in the ads and marketing space. We're continuing to look at how do we make it so that our brands can have the best touch points with their end consumers. Because today, like, there's no real attribution of like end consumer purchasing back up to the brands. Like, it's all really held at the retail level. We think that we're the platform to be able to provide those insights. So we've been investing accordingly there. So overall, like the company is really heavily focused on just making commerce easier for operators across the industry. We work with almost everyone. So we think that it's really important from like an industry perspective for us to get this right. So we're just investing the resources required to really make this platform work. And I think like we've shown our investors and various stakeholders like the plans to do it, and they've clearly supported us and underwrote us accordingly.
Yeah. I mean, hearing you talk, I kind of get that echo of that saying that's with great power comes great responsibility, right? I mean, and when I say that, the power is the data because y'all handle so much of it, but the responsibility that that you guys are really pushing in terms of your overall strategy is how can we move the industry forward? How can we make it better, right? With these data sets and working with everyone in the industry like you do. So it's always a pleasure, Ben, to talk with you. You have a plethora of knowledge and the data that you're interacting with every day is super interesting. And to work at a company like LeafLink that has that amount of data, it's got to be a dream, right? I mean, for a guy like you. So you're in the right space. You're providing the right information. We always appreciate the insights. Is there anything that you want to close with before we wrap up here?
Look, just thank you so much for everything you do. Like, I love being able to come on with you, Kevin, and talk through all of this. If there's anything I can say, it's this. Like, I spend a lot of time evaluating solutions in the cannabis space. And to me, the most important thing about my job is supporting the tens of thousands of families that rely on the companies that rely on LeafLink's platform to do their business. So when I tell you that I think LeafLink is the platform to use if you're an upstream brand or you're a retailer looking to buy your product, I do so knowingly. Like, I know all the solutions in the industry. My job is to evaluate them every single day. And what LeafLink offers is so valuable to our customers that I think any cannabis company could really benefit from being on the platform if they're not. So look, if you're a cannabis operator and you're dealing with any difficulties whatsoever, like you can reach out to me personally, Ben Burstein at LeafLink.com. And I will answer and I'll help you however I can. But I really think that joining LeafLink's platform is one of the great ways to do it.
Very well said, sir. And I appreciate the kind words. It's a pleasure to have experts like you on to really, just share your knowledge of what's actually happening state by state with these different market trends. So can't wait to have you on again very soon. And yeah, with that, thank you all for listening, everyone. Bye.
Cannabinoid Connect, the nation's most diverse cannabis-related podcast.